Okay, so while those were the top headlines of the day, let's also take a look at momentum on the index level. While we've ended absolutely flat on the Nifty with an uptick of just 4 points, it's very important to take a look at the stellar recovery that we've seen from the day's lowest point, because we did open under pressure around the 24,000 mark, and since then it's been a gain of exactly 200 points that we've seen from the day's low. So while all in all we've ended flat on the index, it's been a good day of recovery coming in across the board for Nifty, for Sensex, for Nifty Bank, and more importantly for the broader end of the market, because you had the small cap index that was gaining with 0.3%, slipped into the red and has recouped all of those losses once again. For the mid cap, it was in the red to begin with, and then we've seen a stellar recovery only for the index to end flat. The India VIX was higher by about 8 to 8.5% on the back of all the global volatility that we're seeing, and that is something that the market was also penciling in. But given all the escalations that we've seen over the weekend, ending absolutely flat is a wonderful thing for the market, and it sets us up well, at least in the beginning of the week, is the take coming in. If I take a look at what the sectoral movers were, Nifty IT through and through the top gainer of the day, 3.5% uptick over there on the back of the positive news in TCS. You had decent numbers coming in from LTM and that Anthropic deal that they announced. That stock was higher by 3 to 4%, so looking good for both of them, along with a bunch of mid-cap IT names that were also doing rather well. That was followed by media, auto, bank, PSU banks and finance. But on the flip side, it was the FMCG names like Varun Beverages, Nestle, Godrej Consumer, Patanjali. They were under slight pressure on the back of crude prices spiking up once again, followed by defense, metal, realty, pharma, and then you had energy and oil and gas that have ended absolutely flat. All in all, this was the construct of the day. Of course, you had certain outliers on the back of very healthy Q1 updates. Fino Payments Bank, for instance, or Purvankara, both of those stocks have done well. On the flip side, DMart on the back of its earnings, that's Avenue Supermart, was largely under pressure, and Kalyan Jewellers, the one-way rally that we've seen on the stock since last Tuesday, that since its Q1 update, that stock took a dip, and after that the rally it has seen, that continued well for that stock too. But while that's on the spot basis and everything that happened in the equity market, let's also take it across to my colleague Sajit, who's joining us on the show with a quick F&O roundup. Sajit.
Thank you, Snehi. The market's ending on a flat note, about the 24,200 mark. And it's a good rally that we saw of short covering that happened during the day ahead of Tuesday's expiry there. The open interest up nearly 0.4% in today's trade. The Nifty Bank saw some kind of shorts getting covered towards the second half of the day, and the open interest is down nearly 0.8%, but the index itself is up only 0.15%. Look at the constituents of Nifty Bank. During the morning we saw a lot of shorts getting built up, but that got reversed. You had ICICI Bank, SBI, Kotak and PNB and Bank of Baroda looking at adding some long positions, while HDFC Bank and Axis added some short positions. So overall, it was a long positions getting added for the banking sector, with the banking index up nearly 85 points. In the put and call writing, you saw activity happening by the put writers since morning. 24,000 was a good support coming in, and that was fortified during the day, and then followed by 24,100. Towards the end of the day, we saw some kind of call writing came in at 24,200. So it would, going into tomorrow's expiry, you will see some kind of corrections that could come in if that position continues. So look at the distribution chart as well. It gives you that the call open interest is much higher than they put at 2200, while today we have managed to close about the 24,200 mark at the moment. In the futures gainers, you have Kalyan Jewellers, which was a big mover today, 7.6% up. Long build-up. Seeing TCS was another one which was up on the back of the ABB deal, a multi-year, multi-million-dollar deal that came in. 5.4% up. Voltas is up nearly 5.4% in today's trade. In the losers, you had stocks like BDL, Indian Bank and Manappuram all seeing either short build-up or the long unwind in today's trade. Open interest gainers included stocks like Avenue, where we saw some short build-up happening. Kalyan saw nearly 15% jump in open interest, and ICICI Lombard saw 11.8% jump in open interest in today's trade. Losers included Tata Elxsi, ICICI Pru and Sona BLW, all seeing some shorts covering. So overall the markets ended flat. If you look at the index in detail, it's the IT index that held on to the current level, led by TCS and other stocks. Otherwise, it was a day where other sectors saw some profit booking coming in, and only the IT, which was up over 3% in today's trade.
Okay, thank you so much for that, Sajid. That's the roundup with regard to F&O. Let me also take it across to Meryl. She's here with some of the cues you want to keep on your radar for Tuesday's day of trade.
Yes, coming to you with some of the important cues that you should watch out for on the 14th of July. From India, wholesale prices will be in focus. Also remember, it's a weekly Nifty expiry day, so do watch out for some volatility in the markets. From US, investors will be tracking CPI data as well as cross-border investments, while trade data will be in focus coming in from China. Japan as well will be announcing its industrial production data, so do watch out for that as well. In terms of global earnings, we've got JP Morgan, Bank of America, Goldman Sachs, Wells Fargo and Citi all expected to announce their results. And back home as well, while we've not got any Nifty names announcing results, do watch out for L&T Tech, Tata Elxsi, Jindal Saw and Anand Rathi share and stock brokers, all expected to announce their quarterly updates. In terms of the corporate actions and board meeting front as well, we've got Mufin Green Finance, where the board is going to be mulling a fundraise. And in the primary markets, Alpine Tech's World is going to be in focus as its IPO opens. And also another important listing on the books, SBI Fund Management's IPO is set to open on the exchanges as well. In terms of other events to track, do watch out for key commentary coming in from the Fed Chair Kevin Walsh, the Bank of England's Governor Andrew Bailey, as well as the Chicago Fed President Austin Goolsbee. So yes, these were some of the important events to track on the 14th of July.
All right, Meryl, thank you so much for that. Let me go across. We're joined by Rajesh Palviya from Axis Securities here to decode as to how markets have played out on Monday and how likely the move is going to be on Tuesday as well. Rajesh, we saw weakness at the start of the day. So the cues were negative. There was weakness at the start of the day on Monday. We overcame all of that and we've closed very, very close to the green. So more positives than negatives, you reckon?
Yeah, hi, Harsh. So, looking at the recovery from the lower level, it clearly shows that, market is confident to, show further more strength from here onward. The way market has recovered and again, move back beyond 24,200 mark on a closing basis. So I think if he continues to trade about 24,200, there is a more upside we may see in the coming trading session towards 24,350 to 24,400. So another 200-point up move we could witness in the continuation of this up move as broader market has recovered and a lot of sectors have shown confidence from the lower level in the initial knee-jerk reaction which we have observed in the opening of this today's trade. So looking at the data, put writers are confident at 24,000 strike. So I think that is giving us, some base building activities taking place for this series. So till we are trading about 24,100, 24,050 on a closing basis, I think we may see further higher trajectory in this month, 24,400 to 24,500. We are projecting a target on a near-term perspective as well as Bank Nifty is also looking confident as Bank Nifty also managed to hold about around 58,000 level. The way Bank Nifty has recovered in last couple of trading session, I think here also we could see another leg of up move. Once Bank Nifty manages to surpass above 58,300, I think here also we could see some short covering action and possible up move towards 58,700 to 58,800 we may see in the near term perspective as private as well as PSU, both banking basket have recovered from the lower level and especially PSU banking basket is showing good accumulation activity since last couple of trading sessions. So I think we could see Bank Nifty also to contribute in this upward momentum.
Okay, that's the take coming in on some of those index levels that you should be watching out for. Rajesh, hi. Also give us your sense on Nifty IT, the kind of move that we've seen on that index. Of course, you had triggers on the fundamentals for an LTM, for a TCS. But other than that, even the mid-cap end of that basket has participated. Where are you seeing the Nifty IT index headed? Because we've seen lofty gains coming in recently on that one. And do you believe that there is more legroom on the charts for this index to keep inching higher?
So definitely, Bank Nifty has also Nifty IT has also moved up, and in last couple of week there was a base building activity took place in Nifty IT, and now Nifty IT is managed to cross 20-day, 50-day moving average, looking at the breakout on the near-term chart, if it's sustain about 28,800 mark, I think we may see, this bank Nifty to scale further towards 29,400 to 500 kind of zone in the coming trading session, as large cap IT stocks as well as mid cap IT stocks both have done well in last couple of days. So some of the stocks from mid cap IT universe like Coforge, Persistent, Tata Elxsi, all these stocks are looking attractive, and we may see furthermore continuity in the mid cap IT space. But from the large cap IT space, I think yes, TCS has shown some sign of recovery post earning, and the way TCS managed to give breakout of falling trend line on daily chart, it's a sign of trend reversal on near term chart. Stock is now trading about to 20-day moving average. So I think TCS may extend its gain. 2250 to 2300 could be the next target for TCS. So here also one can focus on, as we see another 2 to 3% kind of up move in the IT space. But long term structure is still weak, but near term structure is suggesting that 2 to 3% kind of up move we could see in the near term perspective.
What about stocks like ER&D stocks, Rajesh? The likes of a Tata Technologies, the likes of a KPIT Tech, Tata Elxsi. What next for some of those? This hint of a move that large caps have made, does it trickle down to those as well?
I think Tata Technology is looking quite interesting, and the way stock is comfortably holding about to all its near-term, short-term moving averages, and the daily, weekly time frame is also suggesting a strength. The stock managed to give breakout of falling trend line on daily chart. Looking at the strength on the daily chart, we believe that if stocks continues to trade above 740 mark, I think we may see further up move towards 785 to 800 kind of zone for Tata Technology. Again, Tata Elxsi also managed to give breakout on the near term chart. Looking at the near term strength, we believe that if it's trade above 3760 mark, I think here also another round of rally towards 4000 we could see for Tata Elxsi also.
That's your take on some of the IT stocks, Rajesh. Lastly, also share with us your stock-specific recommendations for our viewers. What's looking good on the charts?
So KFinTech is first stock where we are holding bullish view. Near-term, short-term charts are indicating a breakout. Looking at the breakout, derivative data is also on the positive side. Third consecutive day where stock is making higher high-low formation. Stock is comfortably holding about 20-day, 50-day moving average. Looking at the strength, we believe that this upward momentum can extend further. We are projecting target of 955, 960. On the downside, 915 needs to keep as a stop loss. Another stock is from the pharma space, that is Divi's Lab. We have seen a lot of activity in pharma space, and Divi's Lab is one of the stock where stock is now negotiating with its multiple supply zone on daily, weekly time frame. Looking at the strength on the near-term chart, we believe that stock is poised to give breakout on the near-term chart, and I think then we could see a next target towards 7150 to 7200. So Divi's Lab is also on our buy list with stop loss of 6 at 75.
KFinTech and Divi's Lab, these are two stocks that are looking good to Rajesh and have made it to his radar today. Rajesh, on that note, thank you so much for your time. Wonderful as always to be speaking with you today. Thank you. Okay, viewers, with that, time to slip into a very short break, but give you a little bit of a glimpse of what's coming on the other side of the break. We're going to be decoding the stock of the day. Talk about Kalyan Jewellers, a stock that's up about 45% in the last 5 sessions itself. What's causing this run? How much of a run-up is still left? Should you be buying, holding, or selling and booking your profits? What's the take coming in from experts? Along with that, we're also going to be doing a little bit of a conversation on the IT sector, given the kind of run-up that we've seen today and the IPO that has caught everybody's attention right now. All of that and more on the other side of this break. We'll be joined by Mr. Sudeep, Bandopadhyay, market expert. So stay tuned and we'll be right back.
Welcome back, and thanks for staying with us here on Market Edge. Now, let me quickly go across. We're joined by Sudeep Bandopadhyay, and among many other things, frankly, Snehi, it's been the rally around Kalyan Jewellers that has left the market slightly perplexed, whether that rally is actually warranted or not. Valuations, when you're looking at it, at a steep discount versus Titans.
Sure.
But at the same time, Kalyan was always valued a little lower than Titan for at least a very long period of time.
Always, yes. But look at the shave off that we've seen in the valuation, right?
Correct.
A year ago, it was trading at what? 120 times price to earnings. It's moderated all the way down to 39 now. Titan, compared to where it is right now, yes, this might look like a cheaper stock, but does that merit the kind of run-up that we're seeing on the stock price only on the back of valuations? Because if you take a look at what the Q1 update was, it wasn't very exciting. And in fact, the stock fell 15% last Tuesday when the update came out. Now, obviously, that was also the day when fresh commentary came in from Trump. It was the Nifty expiry, so there was a lot of exaggerated pressure on that stock as well. But all in all, by itself, Harsh, if you take a look at the fundamentals, that update wasn't all that, all that good for the street to be so excited that the run-up post the update has been to the tune of 45% in the last 5 days.
And in fact, remind me, if on the day the update came out, was the stock in the green or in the red?
15% lower.
Correct. So, in fact, during or when the update came out, the stock did take a knock as well.
It did. It did. But could that be the reason for a 45% upside? That seems a little unlikely.
Yeah, absolutely. Let's in fact quiz Sudeep. Sudeep, how are you looking at things here with regard to Kalyan Jewellers now?
Well, Harsh, I have been liking Kalyan Jewellers for the last almost a year.
Okay.
There are multiple reasons, and I'll just
Yes.
come to that in a minute.
Sure.
Let's talk about this particular episode where it went down and then suddenly shot up. Look, I think the update, there was nothing wrong per se with the update. They had shown 38% sales growth, but it came along with Titan update, which was 39% sales growth. And the market didn't take it kindly because Titan on its volume, on its base, they had shown 39% growth. Kalyan is much smaller. And on that base, they showed a growth which is lower than Titan's. So the market punished Kalyan Jewellers. I mean, that was the story of that day when the updates came for both Titan as well as Kalyan. Now, what happened after that is there were a couple of research reports which came and talked about the positives of Kalyan and gave fresh price targets on Kalyan. I think that led to this kind of sudden spurt because there was no rationale. Even the day the updates came and the Kalyan price tanked, I was very clear that this is not warranted and Kalyan deserves a better treatment. And that's exactly what is happening. And I'll come to that specific three things which make Kalyan very interesting and quite different from Titan. The principal difference is Kalyan kind of grow through franchisee model. Now, this is a very clear asset light model and a faster, I would say this is better or worse, but definitely this trade.
I believe we've snapped that line with Sudeep. We're going to fix that connection and resume the conversation. Just to touch upon what Sudeep is talking about in terms of the kind of move that we've seen on Kalyan Jewellers in terms of their Q1 update vis-a-vis Titan. Just want to take a look at Titan first, because the kind of numbers they've come out with, the growth in Q1 for their domestic jewelry business has been 37% on a year-on-year basis. The like-for-like growth looks really healthy at 39% that Sudeep was mentioning. And just taking a look at the 28% same-store sales growth that Kalyan has come out with. Yes, it's a moderation on a sequential basis, but compared to Q1 of last year where it was at 18%, it's a solid uptick on a year-on-year basis. But yes, quite the moderation from 47% in Q4 to 28% right now when the street was largely penciling in 35%. Maybe that is the reason the stock took such a big knock when the update came out. But so we have Sudeep back with us. Sudeep, continue making your point, please.
So I was just saying that the franchising model is an asset-light model. It kind of has much less strain on the balance sheet. And Kalyan is going through that franchising model. I personally like that model. And I think this is a much a faster way of growth. And they have adopted that model. So that's point number one. Point number two is the margin on jewelry, gold jewelry, and studded jewelry is much higher in northern part of India compared to southern India, which was the traditional Kalyan stronghold. So the expansion of Kalyan is happening now in northern part of India and West Asia, where the margins are higher. So the margin profile of Kalyan will keep increasing. The third and important factor is Kalyan now have the Candere brand, which is one of the other Carrot Lane or Mia brand type of brand which Titan has. So Candere is filling that niche, and the future growth of Kalyan to a great extent will depend how fast they expand and grow the Candere brand. Now, all these ingredients are there for Kalyan to grow and reap the benefit of such growth in the near future. That's the reason why I think Kalyan deserves a better valuation compared to where it ended on the day when they came up with the updates, prices corrected, and things like that. And the research reports came then, and the market price have moved up since then significantly over the last 2-3 trading sessions. Is it worth buying now? I think if you're a long-term investor, it's still worth buying now, and have a one-year view and buy Kalyan even now. That's what I'm saying. It doesn't mean that I don't like Titan. I, of course, always have been liking Titan, and I think Titan still is a great growth story. And Titan's other businesses, apart from gold jewelry, which is watches, spectacles, all these have started showing good trend. So Titan is definitely in a different category, but from a growth perspective, one can definitely look and buy Kalyan.
Understood. So that's the levels that you're watching out for. In fact, that's the view coming in on Kalyan. You've compared that with Titan, and Sudeep, what really surprises me, at least on the positive, is that your conviction on the stock is so high that even after the kind of run-up that we've seen, you're saying that if you're a long-term investor, still continue to buy Kalyan. So you're definitely very bullish on that one. You've compared that with Titan. What about some of the other jewelry players whose growth has been very solid, a Senco Gold, for example? How would you equate Kalyan with Senco and the other players in the market, albeit smaller? But we've seen very good growth coming in from something like a Shringar House of Mangalsutra. Of course, much smaller in comparison, but you've got PN Gadgil, you've got a bunch of other players in the jewelry space. How does Kalyan stack up when put into the bigger basket with all of these names?
Well, I don't think these are comparable, Shay, because they're much, much smaller. Whether it's a Thangamile, whether it's a PN Gadgil, whether it's even Senco, I think they are not comparable in size to a Kalyan or even Titan, definitely. So I don't think I will look at them in the same, put them in the same basket, look at them with the same lens. I think they're much smaller, and their growth on that small business obviously is much accentuated. So they are not comparable. Let's put it this way. If you are invested, if you are looking for growth, if you are looking at a reasonably large play, then I think it has to be either Titan or Kalyan at this stage. Senco is showing signs, but it has a long, long way to go. Others are only very, very niche regional plays and not comparable at all.
How are you looking at IT? Because that's the other one which was absolutely a buzz this Monday. What are you buying? And between large cap, mid cap, as well as ER&D, what is it that you're liking the most? Give us your thesis.
Well, Harsh, I think, I have been very clear as far as IT is concerned. I think the disruption and the challenges of Indian IT companies are real. These are nothing to do with valuation. These are nothing to do with, some passing trend. AI-related disruption is real, and we are just seeing the trailer of this disruption. It's a long way to go before the disruption is done with. Indian IT companies are not bad. They have good management, good balance sheet, and I'm sure they will navigate and they will come out stronger eventually. But this, they're moving from where they are to an AI-led service delivery, to an AI user, to an AI deliverer or AI-related, company. I think it will take anywhere between 1 to 2 years. And this period will be a period of pain. They will suffer on revenue, they will suffer on margin, profitability,
Sure.
every parameter they will suffer.
Okay.
So you may see temporary blips because of rupee depreciation and things like that. But I think at this stage, IT is avoidable. If you want to really go there, look at niche mid-cap IT plays like a Persistent, Coforge, and
Okay.
some of the ER&D companies.
Okay, understood. Very quickly, Sudeep, in just 30 seconds, your view on the SBI Funds IPO. Avoid, subscribe. Your take on that?
Well, subscribe. I think it's a
Subscribe.
great company, fantastic business, and the largest, fantastic distribution, captive. So it is worth subscribing to.
Okay, Sudeep, thank you so much for joining us and giving us that perspective. And viewers, hopefully that gives you a perspective and sets you up well for the day of trade of Tuesday. But completely timed out on this edition of Market Edge from Snehi, myself, everyone who puts this show together. Thanks so much for watching.